So I had a guy saying I don't post the losses, but I mean, if you scroll through my Twitter for, you know, like I don't know, 30 seconds, you'll see that the losses are definitely posted. I even have like several videos of like me posting like losing days. Like I have one video where I posted literally three losses from one stream across the AM and PM session, not in one session. Check out Nasdaq. Okay. All right, so boom, Nasdaq. Watch this down close candle. This should, if we're gonna continue bullishness here, this should hold and propel us above the highs here. Okay. Now this could be a point where I can maybe add one more contract, but I'm not gonna do so. Okay. There's no need to do that. Just going for a quick in and out scalp on a Friday. Okay. It's already been a profitable week. I'm not gonna try and come in here and do Olympic feats. All right. Not necessary. Yeah, I mean, let's say this ends up being a loss, okay? Um, I'm not risking me entering a non-profitable week, okay? Okay, so I was preaching this yesterday. That's the last thing you want to do, especially on a Friday, because you had a profitable week, you were feeling good, and then you come in Friday expecting, the same delivery, and then you end up taking a loss, and then you enter the spiral into the loser cycle. You start taking multiple losses, and all of a sudden you're red for the week, and then you're entering the weekend red whenever it was already a profitable week, and then you're kicking yourself the entire weekend, and then you come into the next Monday with that kind of negative mental baggage, and it's just not a good setup you got going for yourself. So I mean, I'd be okay with it like closing here and coming back down into a 5 minute fair gap. Obviously, that wouldn't be preferred, but that would definitely be permissible. But for now, I'd like to see us continue the bullish order flow. And let me check back up on. Okay, so Nasdaq created a swing low on that down close candle. Let's check on DXY. Okay. So I'm gonna allow it to drop down to this down close candle, but if it really just doesn't show respect to it, then that would be a little problematic. But other than that, I think everything looks good. Yeah, okay, 10:20. So we did just open on that new 5 minute candle. So see how Nasdaq's dropping down into the 5-minute imbalance. That's okay for now. I wouldn't want to. The longer it would spend time in it would be problematic. So see how it just drops down to that 5-minute fair value gap. That to me is okay. I think it did fail to get down to that down close candle. It would have been nice to see it touch that, but it didn't. So at this point, we're looking at this 1-minute fair value gap. I don't know why it's not letting me zoom in on it, so I guess I just have to leave it at that. But basically what I'm trying to say here is we drop down to the 5-minute imbalance. We're coming back above this 1-minute gap. The real, like, picture perfect scenario right here would be like a 1-minute immediate rebalance and then propel us towards the short-term buy side. Now, will it have to drop a little bit deeper into the 5-minute fair value gap? And would that be preferred? Obviously not, but my stop is allowing for it to do that. Oh, Curtis, just saw your comment. Alright, Curtis says, I'm new to the group. What do you recommend? By the way, welcome. Glad to have you here. What do I recommend to study to better understand these concepts? ICT 2022 or just your mentorship videos in Discord? Well, I mean, both. You maybe want to start with the YouTube, but I mean, really, I believe the things I'm laying out are valid and straight to the point. You know, kind of filters out all the extra like talking and like it's just straight to the point. Okay, this is what you're looking for. This is what I do, and this is what really is going on in price. Just straight to the point, right? But for me, the most time spent in terms of watching videos was the core content. It's a lot. It's gonna be a lot, but it definitely has some valid information. Clearly, right? Okay, so back down into the 5-minute imbalance. I'd like to see it really rip up higher from there now. So like small little short-term stop rate, and then we finally drop down into that 1-minute down close candle. And these highs a little bit too clean here. But yeah, I believe if you just do all months of core content, like I said, it's a lot. That would be option number one. But if you sift through all the videos here and you simply just watch me do it live every single day, I promise everything that I learned from those videos, I mean, you're inevitably just going to pick up on all of it. And then obviously also with the daily recaps that I do, as well as the mentorship videos. But yeah, whatever path you choose here, I wish you luck. But definitely the last thing you should do is spend your money on any repackaged course. Okay, I'm sure you already know that, but I'm just letting you know that's the very last option that you should submit to. All right, so I am gonna move my stop up. Being a little stubborn here, but I still would like to see it rip higher up off of this 5-minute for value gap now. Kind of just entering a short-term consolidation here. Okay, watch this this tiny little for value gap here. So the reason why I'm not holding for the full highs is just because Nasdaq's clearly going to be the one to take out the highs first, and I just don't want to sit and wait for ES to do the same whenever this is already enough. And just keep watching the 5-minute time frame. Reset my chart now. So I'm not convinced that we're going lower just yet. I wouldn't really entertain any lower pricing until we get that retracement, right? So basically you'd just be using the high that really started the down movement to the low. Where's the equilibrium? Right here. Just so happens to be right at the short-term highs. Guess I'll watch this. Didn't really trade to half of it, but we worked up the upper quadrant of this down close candle. Price being a little stubborn here, but we'll sit through it, watch and wait what it wants to do. I mean, clearly you could have took your profits already. I mean, up here that's $300. I mean, if that's your model and that's what you look for, cool. Go ahead and take your profit. You don't just because I'm sitting through it doesn't mean you need to. All right, Curtis, sounds good. You definitely are in the right corner here. Okay. I'll just leave it at that. Now, looking at the setup here, is this a good scalping setup? In my opinion, yes, it is. Is it the best setup that we found the entire week? No, it's not. Okay. The highest probable setups that we found this week were post CPI in the lunch macro following CPI that day. So Wednesday, just to not make that confusing because it kind of did sound confusing. But anyway, find the highest probable setups. That's whenever you get the most aggressive. I'm not saying over leverage and risking your entire account. That's not what I'm saying. But that's when you want to get the most aggressive and go for the most in terms of profit objectives, and then you get that and you preserve that. And then I'm coming in here today. Clearly, I took a $100 loss yesterday, right? Or sorry, yeah, it was a $100 loss. Here, what am I risking? 5 handles. What's that? $250. But how much did I make from those two? So it was 2 setups on post CPI and a setup after that. How much did I make from those trades there? $2,350, right? And what's my profit objective for the week? What did I tell you guys in the beginning of 2023 or 2024? Sorry, I'm going to be aiming for 2,000 per week. Now, clearly, when we were in those February shenanigans and price wasn't too clear, it's not realistic to expect to hit objectives every single week in that type of price action. Weeks like this, it is. If you're patient and you pick your shots correctly and you preserve capital. But anyway, the point I'm trying to get across is just preserving your capital and not. If you do trade again, even though you don't really have to, if you do trade again, never risk any significant amount of profits. Okay, so basically, if you're in the same boat as me, this trade here would still have you above your profit objective, right? Or just at it. Let's check on NQ. Price just doesn't want to find traction here, does it? I mean, could I have closed it at $300 profit? Yeah, sure, I could have, but it's just, unless it really, I would say, closes below midpoint of this down close candle here, then I would consider closing it, but other than that, I mean, we're really just in a short-term consolidation. Okay, so on NQ, actually, go ahead and take this up close candle here. Extend that out. Okay, this will be our breaker. So we're right about half of that. So, I mean, it could drop down here and then continue higher one more time, but really, if you look at it, there's really no need for it to do so, okay? So, we traded up, back into the imbalance, left it, okay, down close candle formed, traded back down into the down close candle with a small little short-term stop rate, right above that, and now we're just kind of sitting on top of this down close candle right here. And why is this down close candle important? Because it took us above these short-term highs and created this small little Fourier gap, and created, if you look real closely, it created this small little volume imbalance, okay? Kind of just sitting within this breaker for now on NQ. Highs up here obviously way too clean. So what happens when the markets don't have enough, or what happens when the markets want to create more liquidity to the upside? They engineer it, and they trade off. They make it look like it's resistance, and they trade right through it. Oh yeah, by the way, Curtis, definitely go through. I would definitely say go through the macros, both episodes of that, the 3 episodes of all 3 order block episodes, because there's a lot of information in there. Okay, I promise you won't be disappointed. And then also very important, go through all the daily recaps and reviews tab, because even I find myself going through it sometimes to to remember something, or you know, like, oh, okay, this is what I was looking for on that day. All right, cool. All right, not quite to the take profit there, but we'll get there. So target is short-term buy side, but I'm not even holding on for that because it's not even needed. Okay, so Nasdaq did just clear the short-term highs. Let's see if ES has the wherewithal to get up one more half a point. Okay, there we go. So, I mean, just looking at this trade here, it looks like very small, but, I mean, it's $500, and that's clearly more than enough. I don't need any more than that, what this week has already been. But anyway, target is the short-term highs here. I'm not even holding on for the full highs. Your take profit can be up there, sure, cool. But me personally, I don't have a huge appetite right now, okay? There's no, me trying to gun for huge trades here, okay? I already got that this week. There's no need. But honestly, I forget. I think this is like, yeah, 10.5 handles. It's more than enough. I don't need any more than that, okay? And notice my take profit was at the very high end of the daily flag up here, so I knew that this would likely be a, initial resistance. But still obviously very likely for us to come up and take the full highs. Let's see where NQ is at. So see how Nasdaq utilized that breaker. So we have a low, high, lower low, shifts above, and then it closes right about the half of that, and then rips through buy side. So Nasdaq already took buy side, so I wouldn't really want to try to hold ES too much with Nasdaq taking that. And then we're kind of just tapping into old order flow here. And then remember this tan shaded area. It's that old daily flag gap. Drag it out. We traded to the very low end of that. What did we do? We took Tuesday's daily low, so sell side taken. And then what's this over here? This is our Sunday opening. We traded below that Sunday opening. Okay, created that 15-minute swing low. 5 minute was shifted above these down close candles here. Now you could have longed the 5 minute imbalance here, but obviously I longed on the 1 minute. So we shifted above the those 5 minute down close candles, that looks like this now. So these 3 consecutive 1 minute down close candles, that's all one order block. We trade down into that. Boom, right to the opening. Zero drawdown on the trade whatsoever. Then we trade down institutional order flow entry into the imbalance, and then what happens? We create this down close candle. Why is that important? Because once price drops back down into it, because it remembers the specific price point, the opening, once it drops back down into that, all that is doing is accumulating more longs to distribute them to the buy side up here. Then we have a small little stop right here, down into the 5 minute imbalance. One more shift above. Okay, I already explained why this is a important 1 minute order block. Kind of just sat on top of that, and then boom, moved out of the consolidation up here.